Okay, all right, let's go. I'm not gonna wait all day for people. So let's talk about today. Today we've organized VA myth busting. One of the big focuses since I came to UMortgage and obviously in my career has been VA home loans. As mentioned, I did 94 VA transactions last year, which is about 37% of my business. So I've seen all kinds of stuff, done cash outs, done, streamline refi hurdles when that was a thing before rates jumped, and of course, plenty of VA purchases. A lot of experience with people PCSing from overseas and or from base to base in the States. So as questions arise, don't hesitate to reach out and ask. I can see any questions and or comments. I'm happy to answer those as we go. All right, so VA myth busting, let's go. Okay, who I am. Jimmy Hobson, obviously sharing this, jhhomeloans.com, obviously powered by UMortgage. There's my contact info. If you ever need help with a VA loan, even if I'm not the lender, happy to do so. We want to make sure that we get our veterans taken care of. It's a big deal to me. I did not serve, but I have family members that served, and it's a huge deal. So we want to make sure we take care of the men and women that put on the uniform and sacrifice every single day. It's a huge deal to me, and a lot of us that work here, frankly. So, so let's figure out a couple better ways to serve. So, obviously, way back in the military, the reason I serve veterans, the reason I do these loans is the guy on the far left is my youngest brother. United States Marine Corps, 0311. This is a picture, obviously, as you can see, taken in the middle of Iraq. So, I saw him come home, saw kind of what he went through, and I've made it my mission, really, for the last 4.5 years of lending. I've been lending 6 years, the last 4.5, to really truly focus on the veteran and help people and get better at this. So one thing hopefully we take away from today is hopefully answer any questions you have and help you guys better understand VA lending. Okay. All right. So the very first myth: zero down equals weak buyers. So some of these stats are old because the VA kind of trails behind, but we'll go through those. So the VA borrow of 2020, the median FICO score is 712. Okay. Median liquid assets, 17 grand. Median household income, and this is nationwide. Keep in mind, they may get less BAH housing and substance elsewhere than they do here in Utah, where I'm at. They get a lot more in Southern California. So that averages out. Average loan amount, I stole these slides from my buddy Leroy in Arizona. Average loan amount is $258 in Arizona. My average loan amount for VA loans last year was $420. So it's a different world here in Utah. It depends on where you're at. I've got a couple guys that work for me in San Antonio, but their average loan amount is probably high 2s to 300. So every single market is different. But these are kind of the stats. The percentage of veterans that made a down payment is 28%. So even though they have the ability to do 100% financing in 90% of the instances that exist, many of them still put money down because obviously a lot of them are savers. Okay. Myth number 2: VA loans are hard to close. This is always a big one. When I first got in, there's agents that have been doing this for 20 years. And, the VA loans are terrible, and this and that, and the appraisals are terrible. We're going to address both of those things today. Because, whether that existed 20 years ago or not, that is a different animal today. And so we'll talk about that, okay? As underwriting goes, the VA loan is the easiest loan to get approved for. So underwriters are encouraged always to consider every possible appropriate factor in seeking a proper basis for approving loan applications for every qualified veteran. I myself have got VA loans for people done with 550 credit scores. Sometimes things happen. Sometimes life happens. When someone can show a pattern of getting back on their feet and qualifying credit-wise, we get stuff done all the time. Now, mind you, with rates jumping up, rates on a 550 credit score are not going to be great. It's going to cost a little bit of money. But now that seller concessions are starting to become a thing again, we do have the ability oftentimes to help these guys and gals, okay? As long as the lender documents their reasoning, it's extremely unlikely that the VA staff would ever take issue with their decision. So sometimes we go directly to the VA to get an answer, and when the underwriter says no and the VA says yes, it's hard for the underwriter to continue to say no. Because if the VA will guarantee that loan, the underwriter is going to do it 98 times out of 100. Sometimes lenders will push back. We'll just go to a different lender then. We don't have time for the BS. Our job is to help people buy houses. Okay, very simple. Okay, why lenders love VA loans? The portfolio performance, the default rate of VA loans is under 2%. Okay, a big part of, and the other reason obviously is the VA guarantees it. Conventional is about 2.5, FHA is 6.1, and USDA, believe it or not, which is one of the hardest loans to qualify for, is actually worse than FHA. You know, their lender protection for default, Fannie and Freddie have none. Okay, Ginnie Mae, obviously, there's a possible payout claim for FHA, guaranteed coverage for VA. So that's why lenders love them, because even if a veteran defaults, lenders protect up to 25%, which is pretty cool. Obviously, public image looks good for lenders to help veterans. Now, mind you, if you're a realtor, this doesn't necessarily affect you per se, but the VA portfolio, the reason why our veterans get inundated after they buy a house 6-7 months later is because lenders know the value of a VA home loan, and the paper is worth a ton because of how they perform. So now we as lenders and realtors may not look at it the same way, but we'll talk about a few of those things. But that's why lenders as a whole, big entities, the ones that are funding the loans, love VA loans. Okay, conventional has more overlays, lender overlays than any other loan. FHA has about median, VA has the least. So, you know, typically with most of our lenders, the only overlay we normally run into on an automated approval loan is going to be credit score. You know, sometimes, you know, as you get lower credit scores, they're going to have overlays for debt to income and things like that. But because the VA is such a solid product, you know, we can get a loan done down 580, sometimes even 550, that no FHA lender and or conventional lender is ever going to touch, simply because of the way the program is designed. Okay. Myth number 3: VA loans take too long. Okay. So anyone that knows about VA loans knows this is not accurate. So so they take too long. Most of our VA home loans are underwritten in a matter of a couple days, and that exists actually with most lenders in America. The longest portion of a VA home loan is going to be the VA appraisal turn times. Now, in my market, that's 7 business days. Saturday and Sunday are not considered business days. Holidays are not considered business days. Some markets are longer, some markets are shorter. One of the guys that works for me in San Antonio just got appraisal back in 3 days. So, but again, San Antonio is the largest military city in America, so they've got more appraisers doing the work. But keep that in mind. Some rural areas are tougher. Wyoming, it took me 6.5 weeks last year to get an appraisal back. So keep that in mind, but most of your major metros are going to have fairly quick turn times, 7 to 10 business days, typically. Especially if there's bases around and a lot of military, you're going to get a lot more of that stuff than you do. So that's always been the biggest issue. Now, a couple things to keep in mind. Underwriting is very fast. Most lenders have what they call automatic authority. So most underwriters and most STARs, or staff appraisal reviewers, underwriters and lenders, have the ability to literally sign off on a VA loan as if they're the VA, essentially. VA is still going to review it, but they do have that authority to push the button and get that loan. Okay. Average turn time in 17 was 26 days. Our average turn time last year for me was about 21. I've gotten VA loans done as little as 14. That's a stretch sometimes based on appraisal turn times. I would say 16, 17 days is pretty easy most times in my market and a lot of the markets that we work in. Again, you know, you can go to the VA website and literally Google, or even Google VA appraisal turn times. It'll tell you what those turn times are based on the market. So every market's different, but there are set turn times that if they don't perform, the lender can literally reach out to the regional loan center and push and say, what's going on? Why isn't it back? What's going on? Let's figure this out, right? Myth 4, this is the big one. This is what everyone believes that have been realtors for 25 years. Not everybody, but you know what I mean. So seller has to pay all veterans fees. That is a fallacy and not true in any way, shape, or form. Let's talk about that. So lenders can go about loans a different way. If they charge 1% origination, then they cannot charge for the following things: appraisal, inspection, settlement fee, doc prep, underwriting fee, processing fee, application fee, pest, talk about that a little bit, attorney fee, assignment fee, copy fee, email fee. Now, most lenders are not charging the 1%, you know, because most compensation is built into the pricing anymore, or the rate, and not charged on top. So what you'll do is, when a lot of these lenders, these big quote unquote national lenders that are overpriced, rather than charge origination fees, they will charge discount points to get their rate bought down. So when you see a loan estimate from someone like a Veterans United, for example, or Wells Fargo, you're going to see a ton of box save fees or discount points to get that rate anywhere near what your local broker or small lender can do. So that's what they make up for. So this doesn't affect many people. The unallowable level fees, we'll talk about it. But let's talk about the most important part. Okay, VA appraisals are harder. That is a myth. Now, back in the 80s, 90s, that may have been the case. But keep in mind that every single VA appraiser does conventional and FHA loans, or has for appraisals. Not every conventional or FHA appraiser has done VA, because VA has their own panel, so you have to submit and become part of it. So these people are appraisals on the level of everybody doing other loans. So the myth, obviously, is that they always come in low. I think there was a stat that nationally, I believe it was 92% of conventional appraisals hit value, 91 point something VA appraisals hit value. So the numbers are very, very close. In my market, and again, every market's different, but in the last year or two with inflated prices, I've actually seen more low conventional appraisals than VA. And keep in mind, for the 94 VA loans I did 150 conventional loans. So I've got a pretty good sphere of what came through the market and what didn't. So that's one of the big things, right? Is that they're harder. Not true. So the best part about a VA appraisal is this. They are the only appraisal that has two built-in ways to achieve value. So VA appraiser goes out, they think, oh, I can't determine value, so they're going to invoke TIDEWATER. Now, I get asked the question all the time, well, do they tell you what the value is? They don't tell you the value. What they do is they say, I'm invoking the Tidewater Act. I don't believe it's worth this. Prove to me it is. Okay. So you get back with your realtors, listing agent, buyer's agent. You put together something and send it over to the appraiser. Okay. If it still doesn't come back at value and you're miles off and you just need better value to get it done, then you go to what's called the reconsideration of value. Now, we'll talk about that. We'll go through Tidewater real quick and I'll kind of give you a couple stories. So phase one Tidewater, they've not given value yet. They issued the Tidewater alert. We have 48 hours to issue on Friday. You have till Monday night, basically. So again, they don't make us use Saturday and Sunday because they're not using Saturday and Sunday. They give you the Tidewater alert. They want you to issue 3 comps. Some appraisers are sticklers and want you to put it on a grid. Others don't care. They just want to know why. So phase 2, the appraiser looks at your comps. They've either received comps that support purchase price, they receive comps that do not support purchase price, or receive no comps. So a lot of times we'll do Tidewater, we'll send it over, and we'll say, here are the comps, but here's why our comps worth more. We've got upgrades, we've got new roof, new furnace, things like that, things that they can take into account. I mean, you can only push so much, but we've done that. Now, once they decide to support the price, then they issue a value. Once the value is issued, the appraiser sends the appraisal to the lender. So it goes to the lender, right? If your value is short, then you have the next option, which is a reconsideration of value. So once, let's say it comes back and you're 20 grand short, hypothetically. Once the SAR at the lender has reviewed the appraisal, they issue what they call the NOV in the system, or the notice of value. At that point, we can do a reconsideration of value. What that entails is the veteran puts in writing to initiate a reconsideration of value. We represent comps, why we think it's worth it. We give a narrative why it's worth it. I've seen 5 pages of narrative as well as the comps. And then we send them to the VA. They claim 19 days turn times. Normally it's 4 or 5 business days, and it comes back, and you either get more value or it stays the same. Now, back to Tidewater. Every Tidewater I've done this year, I either got value. I actually had one Tidewater. The guy didn't have any comps. It came back at 70 grand above. It came back so high that I actually called the appraiser and said, is this a typo? Did you screw this up? He's like, nope. He's like, there were new properties that had not quite popped under the MLS that I hadn't seen. This house is worth that much more. So borrower walks into a house with 80 grand equity in the craziest market in 20 years, with a VA appraisal. So it was awesome. Now, reconsideration of value. I've been 15, 20 grand short, and every single time I've gained 50 to 75% of that money back. Because what happens is the VA VA staff appraiser at the regional loan center has the ability to override the appraiser. And so they do that with up to 15% authority. So if it comes in, I mean, do the math on 15% authority. That means on a $500,000 loan, they could adjust $75,000. So, you know, and sometimes there's foolishness when we have someone who works for us, they appraisal came in like $250,000 light. And they fought it because the appraiser was terrible, didn't make the proper adjustments. So with the reconsideration of value, they actually gave more back because the appraiser did such a poor job. You know, no one's perfect. They're bad actors and everything. But that's the beauty of what we do, is we can definitely make that happen, right? Okay, so myth number 6, you can only have one VA loan. This is also applicable to having more than one at a time, right? So you can have more than one VA loan in your lifetime. You could also have more than one VA loan at a time. And you can also have a VA loan if you've ever lost a house in bankruptcy or foreclosure with the VA. So let's talk a little bit about that, right? So the VA, they get what's called basic entitlement and bonus entitlement. So if the veteran has no home loan with the VA, they will qualify for as much as they qualify for. If they can buy a $3 million house and there's a lender that'll lend on it, they can do it, okay? Now, if they currently have a VA loan, then they have what's called bonus entitlement. So if you look at this, you know, basically, you know, the Blue Water bill put in place where they can buy a $3 million house with 0 down, right? Then they get bonus entitlement. So if a veteran already has a VA home loan and they live in a normal county in the United States, then they're beholden to the conforming limit. So, which is 647.2. So we'll do some simple math, right? So the county maximum 647.2, which is 161.8, okay? 647.2 divided by, which is divided by 4. If they've already used their basic entitlement of 36,000, that leaves them 125 left. You take that 125 times 4, they could have a second house for 503. So let's say they bought a condo when they were at in Camp Lejeune back east for $100,000. That would swallow up their basic entitlement. They would still be able to buy an additional $503,000 house with 0 down on a VA loan here or wherever else they go. Now, because the VA guarantees 25%, if someone wanted to go above that number, so let's say they had $503,200 left. If they wanted to buy a $603,000 house on the VA loan, they can put 25% down. Now, people at that point will be, well, why don't you go conventional? Probably because VA rates are, you know, 0.5 to 0.75% better at the same credit score. So, and you can get a VA rate at 660, 680. That's going to be a point and a quarter cheaper than conventional at that rate. So that's why even if they've got the money, sometimes it makes sense to go that route, right? So talk about a handful of things. 0 down equals weak buyer, not accurate. They're actually some of the most qualified buyers in America. I've done VA loans for 1.2, 1.3 million, 100% financing. So it does exist. Harder to get through underwriting. If you do your job, your lender does their job. VA loans are very simple. A lot of people are scared of them. They're not hard loans. They are the most flexible underwriting loan there is. As long as you can make it make sense, the underwriter is going to do it, okay? Take longer to close, not accurate. Yes, you can close a conventional loan 8 or 9 days. In theory, you can do that with VA, but the VA does not give us any action to be able to rush a VA appraisal. So I would never promise someone 8 or 9 days on a VA, simply because getting the appraisal back that fast is hard. Could it happen? 100% if you ordered it day one, but it is very difficult, okay? Seller must pay veterans fees. That is not accurate. Some states require the seller pay for the termite. But if the veteran is not paying 1%, they don't have to pay termite either. They can actually pay termite. Some contracts spell out, like ours has a place where they'll pay for pest. But technically, if the veteran wants to pay for it and not being charged 1%, they can pay it if they want. Now, appraisals are tougher. No, and we do have 2 ways to get more value, and then you can only have 1 VA loan. So we talked about those things. So let's talk about a couple things that are not allowed from a real estate perspective. So many real estate companies have what they call as an admin fee, or something that they charge over and above their commission split as a buyer's agent. Admin fees are not considered usual and customary by the VA. They are not allowed. So If you have that, you're not allowed to charge it. The closer, most big wholesale lenders will kick that at the end. So make sure you have that conversation either with the veteran, knowing that so you understand, or have a seller pay it. Seller can pay it all day long. So just, some things that, if that's a big admin fee that's required by your broker, if you're not the broker, look at those things. Because, I don't want to mess with your money, but I know how the VA lands. So that's a big deal, right? So 3 questions you should ask every single person you work with. Number 1, are you or your spouse a veteran? Okay. If so, if they answer yes, say, are you entitled to disability from the VA? If they say yes, then normally they're going to be guaranteed to be able to get a VA loan. Do you have a certificate of eligibility yet? Normally we can pull that, okay? Sometimes we can't. Sometimes we need a DD-214, or if they're still active in the reserves or the Guard, we'll need a statement of service, or active duty military. Sometimes they've been in so little that maybe they don't show up yet. But we as a lender, or the veteran themselves through 3 benefits can pull that, right? But if they are a veteran, keep in mind that VA rates traditionally, at least in our part of the world, are going to be 0.5 to 0.75% lower. So if a conventional rate's 5.5, a VA rate's going to be 4.625, 4.75, same credit score. So those are the advantages of that loan for a veteran. Okay, who's eligible? Let's talk about that. So this shows the different time frames. So if you do work with a lot of veterans, or you want to, this will kind of guide you. The most important part is once someone's done 90 days of active duty, currently in the last 32 years, they are eligible. We are technically at war, and we've been at war since August 2nd of 1990. Now, 90 days active duty. So a couple things that don't count. Tech school doesn't count. Boot camp doesn't count. So if someone goes to boot camp and tech school and they get stationed at, say, Hill Air Force Base here in Utah, once they hit 90 days, they're eligible for a VA. Pretty simple, okay? Now, usually National Guard reserves, they need 6 years with their point statements, unless they've been activated on Title 10 orders or Title 32 orders. So if they've been activated and called up and gone to the Middle East, or under the last administration, many people were called up on COVID orders. Many of those people qualify for VA lending. Make sure you get with someone that understands that, because the last thing we want to do, if we can get a VA offer accepted, is have a veteran have to use a conventional loan. Not that conventional loans are terrible, but if they have a disability rating and there's no funding fee, and they're saving 0.75% or more sometimes, it's to their benefit. They've earned it to be able to use that loan. Okay. Documents needed to obtain a COE, obviously. Active duty and statement of service. Oftentimes we can pull the COE from our VA portal. So we don't need that, but if we do, we get that. Veteran, obviously, they're going to have a discharge DD-214. Should list what their service was. Reserve the statement of service, point statement, copy of discharge. National Guard, also NGB 22, point statement. If those guys are active, oftentimes we can get a statement of service from the command that lists their start and stop dates, and when they're getting out, and how long they've been active, and their character of service. How well they've served and what they've done. So those are some big things. Obviously, if you've not seen what's called the certificate of eligibility or entitlement, this is what it looks like. Okay. If they had a current VA loan, it would be listed in that grid under that VA loan number. It would say how much entitlement they currently have charged and what the status is. If they had given one back in a foreclosure or bankruptcy, it would show a status of entitlement charged, and then that's how we would determine what more they could buy should they decide. The VA doesn't limit you other than the max amount you can buy after a foreclosure or bankruptcy. So if you have questions about that, obviously we can talk about that further. Okay. VA funding fee. So if a veteran's got a Purple Heart and or a disability rating that they've gotten out, they do not have a VA funding fee. If they don't have any of those, the first time use is 2.3%. What the funding fee is, it operates a lot like mortgage insurance, where basically it helps continue to take care of the VA process. Basically, it helps fund the VA loans for losses and different things like that. The majority of people that I deal with anymore, unless they're active duty, are not paying a funding fee. Now, if they go to buy a second house or use their VA loan a second time, if they put 0 down, then they're going to pay 3.6%. But as you can look at the chart, obviously, if they put money down, You know, if they're rolling from one house to another, oftentimes they'll put 5 or 10% down. Once they do that, obviously it lowers their funding fee significantly. There's a massive difference when you drop almost 2% on a $500,000 house. I mean, that saves you 10 grand. So on cash out or regular refi loans, that subsequent use funding fee is always the same. They don't go off loan to value. So again, when in doubt, there are some times when the VA loan is not the best loan for someone. But that's why you want them to consult an expert in all lending, whether it be VA or conventional, so they can help guide them down that path to what makes the most sense. Okay. Important, like we talked about, they may not pay any real estate commission or real estate transaction fee. So if the listing agent has got a house listed and they're given 2% of the buy side, you cannot collect the other 1% from the veteran. It is against VA rules and technically illegal. I don't know if you're going to get put in jail for it, but it is against VA rules, and they can very easily strip you from the ability to do any kind of VA transaction. Believe me, they do pay attention to it. When stuff gets audited, they're going to find that, and they find someone paid that. It's not going to be a happy day for people. So when in doubt, just get the seller to pay the difference, okay? Because I do believe people are worth their money, but sometimes situations arise that the house that makes sense is 1.5% or 2% buy side. And for that, then you need to negotiate that with the sellers, okay? Items limited by the VA for the seller concession rule. Now, we are back into a market where concessions are starting to become more popular. So the VA seller concession rule only limits payment of the following amounts to 4% of the value, which is massive. They can pay the funding fee, okay? They can pay part of the taxes and insurance of prepaids, right? That's easy. They can pay for gifts, TV, appliances, stuff like that. They can pay extra points that is beyond temporary interest rate buy downs. So not a 2-1 buy down per se, but if they wanted to pay a point for the veteran to buy the rate down, they could. And they can pay off credit balances. So if a veteran needed, you know, a $2,500 credit card paid off to qualify for the loan, the seller could do that with seller concessions. It's one of the very few loans that allow this. Also, another cool thing about VA, people don't know, the veteran can go out and get a loan, like a signature loan or something similar, to help with the down payment. It's the only loan type there is. We have to calculate the DTI, but they could literally go out and get a $5,000 signature loan to cover down payment and closing costs should they decide. More often closing costs. It's not every lender likes it, but it is possible to do. So that's another thing to think about if your buyers are short on funds. The VA does allow that. And most of the gifts that the VA allows, it's a much easier process to source gifts with VA than any other type as well, okay? In addition to the 4% seller concessions, sellers lenders can assist with pay the closing costs. So they can pay 4% and frankly up to about 3% of closing. So they can get 7% to pay costs on a VA loan. So, you know, $200,000 loan, the seller could give 14 grand. You know, I mean, I've seen some stuff where people are paying 10 grand right now. Not in my market, but like in Texas markets and places like that. So that's the best part about this loan. It's got far more flexibility for the veteran if they need help to cover stuff. So a lot of these people, maybe they saved up, but sometimes moving is super expensive when you're in the military. The military covers a lot of it, but they don't cover everything. So sometimes they're strapped and they need a little help. Seller can pay for a lot of those things now that we're in a market that's more rational when it comes to VA loans, okay? Primary benefits. They will do 100% financing up to the conforming loan limit. Unless they don't have a VA loan, then they have no cap, okay? Gift funds are allowed for all closing costs, things like that. The one thing that gift funds cannot cover. So now that we're out of that weird market, at least in my area, gift funds were not allowed to cover an appraisal gap. So if the veteran decided to cover an appraisal gap of 10 grand, that had to be their own funds. The gift funds that they got from somewhere else would have been used to cover like closing costs and stuff. So lower FICO score requirements. The VA itself does not have a credit score requirement. Lenders do. We have lenders that go to 500. As crazy as that sounds, it is possible. Now, mind you, most people at 500 are not going to have decent enough credit to get them through there, but the VA is the best loan looking at extenuating circumstances. You know, because the military is notorious for having pay issues. Sometimes we can get around stuff like that. Lower interest rate in our world, lower fees, flexible underwriting. They do allow for some energy efficient improvements. The VA loan is fully assumable by any person. does not have to be the veteran. Now, not every lender makes this easy, but anybody can assume a VA loan. So if someone's got a 2.375 VA loan, it can be fully assumed by anybody, as long as we want to give the equity to the seller. A couple things to keep in mind. If the veteran law allows a non-veteran to assume that loan, their entitlement is still tied up. And until that house is sold, their entitlement will be tied to that house. If the new buyer defaults, it is a default on the veteran's entitlement. So my suggestion is if you have VA people that want to offer that, make sure they do it to only a veteran that has entitlement to take it over, because it doesn't make sense otherwise. No prepayment penalty, no mortgage insurance. The VA funding fee, just like upfront mortgage insurance on FHA, can be financed. They do 100% cash out refi. There are some rate hits to that. Normally 90% is where most lenders want to top out at to get the best deals. They do have the streamline VA, which is called an EARL. It's an interest rate reduction refinance loan. It's pretty slick. So if you do a yearly follow-up your clients on the real estate side and you say, hey, you know, I know you're not moving anytime soon, but I'm your trusted advisor. You know, when you're making your phone calls, have you thought about possibly reaching back out to Jimmy, your lender, and looking at refis, because rates have dropped dramatically. You know, I've started doing VA loans very heavily in 18 through now, and I've refied some people, believe it or not, because they were, you know, back then rates were probably not far from where they're at now in the fours. I did a VA loan at 1.99 last year. So, you know, sometimes you can take people and drop them a point or sometimes more. So it's definitely a benefit. Seller concession 4% plus the closing costs. Okay. Allowable and unallowable energy efficient improvements. I've never done this, but they do it. You can do solar heating or cooling systems, furnace replacement, clock thermostats, insulation, storm windows and doors, heat pumps, insulated garage doors. Some of this is not applicable to all areas. They do not allow new roof or shingles, vinyl siding, air conditioning units unless the veteran's got a medical condition that they would benefit from that. And of course, glass block windows. Okay. CFPB, we'll skip past these guys. Obviously, we know who they are. Veteran homeowner stats. 66% of veterans who had a home reported they used the VA Home Loan Guarantee Program. 33% that have mortgages said they did not know about the VA program. Now, that's gotten a lot better over the last few years. We've been working on a lot of advocacy about that. But this is the sad one, it's the bottom one. 46% said no one ever discussed it. I have people get to me all the time because the other lenders steered them away. So if the program makes sense and we think we can get a VA offer accepted, the veteran should be able to use their VA benefits, period. Okay. A couple of things that I'll mention while I'm here before I forget, and then I'll take some questions. If you're interested in learning more, there are some communities on Facebook and a podcast. So we at UMortgage launched a podcast called Tip of the Spear. Talks about all things VA lending, all things VA scenarios. It's on YouTube. It's great. If you are a veteran or a realtor and or lender want to learn how to serve veterans better, I suggest you look up Vetted VA for Professionals. So VETTED, Vetted VA for Professionals on Facebook, and join and ask questions. And if you decide you want to serve at a deeper level, they're always looking for more moderators. I've been active in there for 2+ years, and it's changed my knowledge of the VA loan more than anything. I started way back in 18 with Military Mortgage Boot Camp, and every year I learn more, and just how to serve people better. So that's, you know, those are some of the things we look at. They do have specially adapted housing. I've never done one of these loans, but I would do everything I can to make this work. If you have a veteran that maybe needs something built for wheelchair access and things like that, they will receive up to 50% of the cost, not exceeding the maximum amount by Congress. So the current amount in 22 is $101,000, right? So if, you know, that can be huge to do a lot of things to help people with disabilities. A lot of people come back with no legs and, you know, different body parts unfortunately blown off, or, you know, from the war. They do have a program for them. Okay. All right, Utah, because I am Utah based. All of our counties have tax exemptions for disabled veterans. Pretty much every state has something, depending on the county. Right now, AIM, the Association of Independent Mortgage Experts, is currently lobbying on behalf of veterans. What we're trying to do is make it so that Maryland just passed a law where if a veteran is 100% rated, they immediately abate the taxes before they even close. So when you go to close, that tax is not even a debt to the borrower anymore. And so they show up and there is no property tax. So we're working on that on a national level. Some states are easier than others. I know we're working on it in Utah. I know a lot of the states nationally are doing the same thing. So if you want to know more about that, reach out to me. If you know anybody on the local level of your state that could be good to push that through, that's a veteran advocate, definitely reach out to me. I'll get you in touch with Brendan McKay over there. He's the one that's pushing this through. He's the one that got it passed in Maryland where he operates. And we're doing our best to kind of get that for everybody. All right. Should the seller accept a VA offer? Now, sometimes you know, again, I can't implore enough how important it is to have a lender that understands VA home loans and to be able to call the listing agent. You know, it's just the knowledge of a VA loan and being able to overcome people's fears about it is a huge deal for a lot of people. But again, easier underwriting, little no overlays. We're seeing 24-hour underwrites in a lot of instances. Okay, zero down doesn't equal inferior buyer. You know, like FHA, and FHA doesn't always equal that as well. But traditionally, you know, these guys have solid credit, 700 plus. You know, they can be conventional buyers in most accounts. They have two additional options, obviously, to achieve value. Lenders like them more because they perform better, obviously. And of course, it's one of the greatest ways to honor a veteran, say thank you for your service, help participate in the homeownership dream. You know, they'll be the best neighbors your neighbors will ever have. You know, a lot of them just, you know, they're regular everyday Americans like the rest of us. They just want the opportunity to own a home. It's a big deal. So, all right. If you ever needed to, you have questions, that's the number for the VA Regional Loan Center. They have them all over the country. Mine's based in Denver. And so when I call the valuation department or whatever that looks like, I talk to people there. So, but there's in Atlanta and there's Texas, and there is all over the place. So, okay, that's it. So I know I went fast because I talk fast, but what questions do we have, if any? I know I got a few of you on there. Do any of you have questions that I can answer online or offline? Okay, hold on. You can see it. Let me look here. Yes. So the question is, are there any specific considerations, criteria to finance the VA funding fee, or is it available in all cases? So on a purchase, you can always finance the funding fee. Now, obviously that counts against DTI. So, you know, that may limit your impact. On a cash out refinance, you're 90% where you get your best terms. Your 90% on a cash out refinance is going to be 90% including the funding fee if applicable, or 100% including the funding fee if applicable. So it does count towards DTI. So, you know, so there's that. Actually, zero rating is the minimum to waive the funding fee. Sometimes people are getting out or they have service, or maybe they're collecting a VA pension, they'll have a zero rating, but a rating's a rating. Like typically 10% is what you see at the minimum. And people will get 10% for tinnitus, you know, hearing issues, but any rating waives the funding fee, and it'll spell it out right on the certificate of eligibility. How do you sign up to become a vetted VA? How do you? Okay, perfect. So go to vetted VA for professionals and get in the community. And then if you want to learn more, reach out to Nathan, reach out to Brandy, or of course Christopher Griffith, who started it, and they can walk you through what that takes. It is a commitment. It is not. People sign up kind of with the wrong expectations. It is not a lead source. Essentially, you are volunteering your time and money to better serve and protect veterans. Now, do you get deals out of it? 1,000%. I've gotten way more out of it than just deals. I mean, relationships and friendships over time. I was just actually in Texas at Vetted VA's summer camp until Sunday. It's an amazing experience. You get around like-minded people, veterans, realtors, lenders that deal with VA people all day long. In fact, this little incident here is the edge of a 50 cal scope because I couldn't get it quite sighted right, and so it decided to give me a little action in the forehead. So, but that's how. Vetted VA is huge. You know, sign up with that. If you're interested in more education out there, in addition to that, there's a program called Veteran Mortgage Advisor. It's run by some friends of mine, and as a lot of my people have taken the class, and I've actually got it as well. It gives you a lot of rudimentary knowledge all the way to the end about things that you may want to know about VA loans. There is a cost to the program, of course. You can belong to Better VA, the community for professionals, for free. There is a cost, obviously, to Veteran Mortgage Advisors, but it's probably worth it. Now, if you go to BeneVA and try to join the main group, if you're a professional realtor lender, they are not going to allow you in because there is zero solicitation. So if someone needs help in Utah, I cannot say, hey, it's me, come see me. We're on the map and we're moderators. They choose us because of our accountability and action in the group and how we help others. So that kind of gives you an idea. Oh, well, you're welcome. Thanks for coming. Any more questions? I don't think I have any more, but let me look here real quick. Yes, okay. All right, minimum rating we did. Thanks, Alec, appreciate you. All right, any other questions? Okay, if you guys need me, you have questions for me, if I can direct you to someone competent in your area, someone that's excellent, you can email me at jhobson, JHOBSON, at U, like the letter U, like universitymortgage.com. You can call me at 801-979-6365. I am here to help regardless if it's my loan or not. My commitment, being vetted VA and being a moderator in that group and being vetted VA 5, is that I will help serve the veteran in whatever capacity I can. And that means helping people throughout the country navigate the process to make sure that, number one, they don't get taken advantage of, and number two, they work with solid professionals that have their best interest at heart. So thanks, Brian. Thanks for coming. All right, so let's look and see if I got anything else. Okay, I think that's it. You guys have any other questions for me? Thanks, Tina. Thanks for coming. Appreciate y'all. If you have any more questions for me, don't hesitate to reach out to me. Again, you know, check out Tip of the Spear podcast on YouTube. Definitely check out Vetted VA Community on Facebook. It's different and unique than anything else. We don't allow solicitation. It's a very structured group. No swearing. We don't literally allow links to outside companies. We're trying to protect people so they get the information they need to make an informed decision, 100%. So if you have questions, reach out to me. I appreciate all you guys.